Hello, I'm Bill Birding, General Counsel for Orange Coast Title family of companies. This video that we're doing today is the first of several videos that we're going to be doing in order to have training on what is ALTA's best practices and the ability to be in conformance with the new rules and regulations under the Dodd-Frank Financial Reform Act. This act is the single biggest change in the history of lending in my or all of our collective lifetimes. It is going to require changes in how we do business. It's going to require changes in how everything in the company is structured, and it's going to change the way that title work and escrow work is done for the foreseeable future. You can rest assured that Orange Coast Title is on the very, very cutting edge of Dodd-Frank compliance. We have been very fortunate to be at the table with the CFPB, the Consumer Finance Protection Bureau, and varying banks, as well as the American Land Title Association, or ALTA, in putting together how Orange Coast is going to conform with this new regulation. We're going to go through each of the individual parts to the regulation and how we go about meeting those challenges. This video is supposed to be an overview of all of the changes that are going to occur. Underneath each one of these changes that we're going to be discussing will be a whole nother series of training sessions, some video, some webinars, some written in varying forms, and those are going to be done by certain groups of people that are going to be assigned to the project. You may do one more training session after this. You may do 7 more training sessions after this. I just don't know how many you're going to do, because it'll be pretty much predicated upon your job. Some people will have all of the rules and regulations hit them. Other people only have a very small fraction of them hit them. But what we're going to do today is simply do a training session to discuss why we're doing it, where we started, where we're going, and how we go ahead and make sure that we do lie in performance with Dodd-Frank. When John Marconi founded Orange Coast Title in 1974, he founded under the customer is king attitude. That attitude has carried this company through to today. Well, not only is the customer king now, but the customer is going to be able to have security. They are going to know that when they deal with the Orange Coast Title family of companies, that we are secure, we are compliant, and we are one of the strongest title agencies in the nation, which we flat out are. I know for myself, I'm very proud to be part of the Orange Coast Title family of companies, and I know you are too. We have always provided great title and escrow service. Now we're going to provide great security. Dodd-Frank is a bill that was passed a couple of years ago in reaction to the housing crisis that we had in 2007 and 2008. Probably it's a little bit of an overreaction to the housing crisis, but they decided to make a very comprehensive bill in order to make sure that the consumers were protected from predatory lending. The bill is over almost 25,000 pages long. The regulations discussing this bill and clarifying this bill right now are 1,100 pages of regulation. My best guess is when this is said and done, there will be another 24,000 pages that we will have to comply with. That's 50,000 pages of very, very technical compliance. Originally, Dodd-Frank did not address the title industry. In fact, we were specifically excluded. But then, in a later part of Dodd-Frank, they brought in settlement services as agents of the lenders. And because they brought that back in, we are now under Dodd-Frank, and we're going to have to comply. A lot of people, from the corporate admin group to people in all of the various family of companies, have participated in an incredible amount of time putting together a reaction and a compliance program in order for us to meet Dodd-Frank. The number of hours are in the hundreds. You should be very proud of the amount of work that your company has put in, and the fact that we are on the cutting edge. We are in the top 1% of all companies that are in compliance with Dodd-Frank. Right now, we are in the process of finalizing an audit, and we'll talk about that in a little while. We will have a Dodd-Frank compliance audit for both what is called a level 1 and level 2 test. We will have that done by the end of this year. One thing that we are doing is we're going to step up training. And this is the first step in what we're going to do in order to make sure that training is done, and done in a timely manner, and that when you are trained, that you will have to sign some type of certificate which will go into a database that shows that you have participated in the training. We will keep a log of all training, and we will do a lot more training into the future and then log it all. So that is something that is going to change in your world. This training is not optional. We have to in turn verify that you have indeed done the training so that we can pass future Dodd-Frank audits. What I'd like to do is I'd like to talk about what happened here, where we're going, and how it was resolved. And then what I'd like to do is discuss what the American Land Title Association has done in creating what we call best practices, which is a series of 7 pillars. And the pillars are the baseline. They are the construction. They are the foundation of what it is that we have to comply with. Based upon those 7 pillars, there are 350 plus separate protocols that we need to be following. We are going to meet those 350 separate protocols. And we are going to be certified by our auditors that we have done so. This puts us in the very, very upper reaches of compliance for Dodd-Frank. We have spent well into the 7 figures in order to make sure that we are going to be compliant. And also, Orange Coast Title and the entire family of companies have given up a significant amount of time and resources in shaping the best practices. I am on the board of the American Land Title Association, and I am a co-drafter of best practices. Where we have questions, where we have issues, and where we have problems into the future, you can feel free to direct them to me. I may not know the answer, but I probably know what we discussed and what the lenders are looking for, because there's going to be no standardized approval process for Dodd-Frank, sadly. Instead, every lender is going to be interpreting it just a little bit differently. However, the majority of lenders are going to approve the ALTA best practices as a safe harbor that if the title company abides by best practices and they have a SOC 16 level 1 and 2 letter, which we will have, and we will have it very soon, and by the time you've seen this video we may already have it, that will show any lender that Orange Coast Title and our family of companies are indeed compliant with Dodd-Frank and best practices. With that, let's discuss what happened here. We all know about 2007 and 2008. Not a good time in our industry, not a good time in our country, not a good time in our economy. We were watching banks fail, we were watching foreclosures increase and mount, and we were watching a wholesale meltdown of our economy. Scariest economy situation since the Great Depression. On top of that, there were a series of lawsuits that were saying that for any foreclosure that was improperly done, that it may not be insurable. The American Land Title Association, as well as the major underwriters, met with the Department of Treasury and met with other groups, and we stepped up and said, we are going to make sure that those foreclosures are insurable. We stepped up and really helped avoid a major crisis in this country. Had our industry not stepped up, we could have had a wholesale meltdown even further of real estate in this country. I have never been more proud to be a professional in the title insurance industry. We did some amazing work as an industry, making sure that we were the backstop. We were the ones that solved the problem. And if you're not proud to be in this industry, you just need to think about what would happen if our industry had not stepped up. We would have had a wholesale crash of real estate much worse than what we had. So you should be proud of the job you do. You should be proud of the fact that home ownership is as easy in this country as it is, and the fact that our industry serves as a crucial cog to that ultimate goal of home ownership and being able to protect the American dream. ALTA has an American Dream Award that we give to congressmen who participate with us in making sure that home ownership continues. We do really protect the American dream, and you should be very proud of what we do. Dodd-Frank compliance actually started well before Dodd-Frank was passed. We didn't even know what Dodd-Frank was going to say, but we knew something was coming down the pike. So what ALTA did in my first year on the board is put together a Future of the Industry committee. And what we did is we looked at best practices, we looked at a model agency contract, insurer solvency, agency solvency and bonding, producer oversight, causes of escrow theft, and market conduct. And what we did is we just did a fact-finding policy whereby we went through and looked at each of these issues and pulled together a significant amount of information. And after we were able to pull together that information, Dodd-Frank was passed. And Dodd-Frank then created the CFPB, Consumer Finance Protection Bureau, and then the government started putting out a significant amount of bulletins from CFPB, the OCC, etc., and basically said that anybody who is working as a vendor of a lender has to comply as if they are the bank. And then that brought us back into the loop, and therefore we now have to comply with all these rules and regulations. The CFPB is not part of something that Congress has to approve. They are a separate agency, and they are self-funded, which is unusual. But where they get their funds, they get it from varying banks who commit violations. Within the first 3 months, American Express had an $85 million fine, Discover had a $200 million fine, Capital One had a $210 million fine, and then lately JP Morgan Chase had an $18.1 billion fine. And we are expecting Bank of America, Wells Fargo to have similar or greater fines cast toward them. The banks are justifiably nervous and scared. They are going to limit the amount of vendors that they work with, and they're going to limit it to those vendors who can prove up that they are compliant with Dodd-Frank. So when you think about the lenders, think about the fact that they're being fined in such huge numbers. That justifies their fact that they are taking such extreme caution with their vendors. We are going to do everything we can so that we do not lose one single solitary deal based on this. We are ahead of the game. What we decided to do is put together a group, and what we decided as the ALTA board is that as opposed to giving it to a committee, we decided to have the board write best practices. We didn't know it was best practices at the time, but we decided to create the 7 pillars of best practices, and we made it. We had many meetings in windowless conference rooms around varying airports in the country, and during an exhaustive period, we were able to pull together and agree to best practices. And in that process, we met with CFPB, we met with varying banks, both large and small, made sure we know what they wanted, and we integrated what CFPB wanted, what the industry needed to do, and what would work for all parties concerned. And we came up with the 7 pillars. And the pillars are really the foundation of the best practices. And that's why we called them pillars, because they are the foundation. Of the 7 pillars that we're going to talk about today, go 358 different protocols that we have to follow, and we will be following all of them. Best practices is broken down into 7 pillars, and that's what I'll talk to you about right now. 1, comply with all state and local licensing. 2, control your escrow accounts and reconciliation process. 3, protect your IT information from personal non-public information, or NPPI, namely guard your social security numbers, guard your account numbers, and that type of thing. 4, recording and pricing. There was a lot of complaints that our industry was taking documents and not recording them timely. There was a lot of complaints that we were overcharging, not so much in California, but in other states as well. 5, policy delivery, premium reporting and remittance to the underwriter, namely making sure that the client got what they paid for in a timely manner. 6, errors and omissions and all sorts of insurances. And 7, how to deal with customer complaints. Because the banks have to deal with customer complaints in a certain way, we are going to be dealing with customer complaints in a certain way. Pillar 1. Establish and maintain current licenses as required. Sounds really easy. It's not. We have, within our family of companies, licenses in 48 states around the country. We have several hundred licenses out there. We have individual licenses, escrow licenses, title licenses. We have licenses for marketing reps in California. We have licenses for escrow officers in Nevada. We have licenses for individual producers in Colorado. Every state is different, and every state has their own set of licensing idiosyncrasies, and we're going to have to meet them all. But we are in a really good shape. We have all the licenses currently. We are all up to date, and they're being maintained in a database called EasyDoc. We built a database here called EasyDoc so that if we ever have an issue regarding best practices, all of the documentation is in one place, so that if an auditor wants to come look at us, all they need to do is get into EasyDoc and they can see every single document that we have. I can tell you that we have not in the hundreds but in the thousands of pages in EasyDoc. We have all of our underwriting manuals, all of our licensing. Every single thing that we're going to be discussing here today is in EasyDoc, so that when we get vetted, or if we get vetted by banks, they can desk audit us, and we want to make it as easy on them as possible. So the database has been constructed, and it is working very, very well. So I'm very happy about that. It's a great job by our IT department. The next section is written procedures and controls for trust account. We have had to change all of our banking around significantly. We complied with many of the best practices and met most of the protocols already. We've never had since 1974 a major defalcation in this company. We do it right. So that is exciting. However, we still had to make some major changes. We had to change our reconciliation process from a two-way reconciliation to a three-way reconciliation. What does that mean to most people in this company? Nothing. It makes a big difference to the accounting people, but that's really where it stops. However, it's going to slow up the reconciliation process, but it's also going to make sure it's more accurate. We're going to have a separation of duties. We all wear many hats here at Orange Coast, and some of us are going to have to take off some of those hats, and we're going to be a little bit more corporate, a little bit more structured on how we end up performing the reconciliations and the accounting. Finally, we have employee background checks. We had a background check policy in place before. Honestly, it was one of the more sophisticated ones in the industry. The problem is we didn't have a policy on how often we needed to do the background checks, and each company was slightly different. Well, that's changed. Starting January 1, there will be a background check on every employee every year. And certain things we can let go, certain things we cannot let go. And if something happens in your life, it may require several different things. One, it may require that you can no longer be a check signer. Number two, it would require you are not allowed to work here anymore. Those are the types of things on the background check. But I will also tell you that we have run background checks on everyone currently, and there's not one person in this company who I would not feel comfortable working on an escrow. So we've got a tremendous team, and we want to make sure that we keep that tremendous team together into the future. The third pillar is a written privacy and information security program to protect NPPI, namely to protect Social Security numbers and those things that people can commit identity theft. One thing about our industry, we are one-stop shopping when it comes to identity theft. Our 1003s, our SIs, etc., have every single piece of information a thief would ever want in order to commit identity fraud. They don't have to piece it together. It's all on one page. Therefore, we have adopted encryption programs. We have segregated the NPPI into different databases, and we have made sure that that information cannot be gathered. We have also made sure that we have beefed up our physical and network security significantly. We have now 2 separate data centers for most of the company, one in Anaheim and one in Las Vegas. We have a disaster management plan. Basically, if something goes down, we can get the company back up in a matter of minutes and close deals out of our second data center. It's a mirrored data center. Everything that is in one data center goes into the other data center in just a matter of seconds, and we can bring it right back up. That has taken an inordinate amount of work and been very expensive. We have gone from numerous servers to basically creating our own 60 terabyte cloud. And that cloud gives us an amazing amount of security and makes it very hard to be breached. So one of the policies we have is a disposal of information policy. Basically, how do you destroy the hard drive? What is the specific way that you're going to destroy the hard drive? What is the specific way you're going to get rid of the information? We have policies and procedures for that. Boy, do we have policies and procedures for that. We probably have probably 25 documents, 30 documents to go over everything from what happens if everybody has the flu on the same day, to an earthquake, to a hurricane. And yes, since we have offices in places that have hurricanes, we have to have every natural catastrophe taken care of. We do. We want to make sure that whatever the crisis is, we can manage that crisis and we can continue to stay open. And so we've been able to do that. And it is taken a lot of work from a lot of people. This pillar 3 is by far the most difficult pillar to make sure that we keep up. The other part of this is that we have a clean desk policy. And a clean desk policy does not mean nothing on your desk. It means no confidential, non-public personal information that is out and left when you leave, either on your desk or your computer. And if you go for a period of time, you need to turn your computer off, and you need to put everything away in files cabinets that are locked. and you have to have a desk that has no personal information. You don't need to take off pictures. You don't need to have a really clean desk, but you need to make sure that all of your files that you're working on have been put away. When there are site audits done by the banks, and there will be site audits done on the banks, they're going to be looking for that. They're going to be coming around, opening up files and looking at those files and determining whether or not you have complied with the clean desk policy. That is going to be a major change for both title and escrow officers in the future. And I already have gotten quite a bit of pushback from it. This is not something that we're going to be negotiating. This is a policy. Every company has to do it. It's not just limited to agents, but it's underwriters. Anybody that's going to be doing business with banks is going to have a clean desk policy. We have a written clean desk policy, and we are going to follow it. And the days of having stacks of files on your desk and then going home at night is a problem, and we're not going to allow that into the future. So we're requiring a vendor agreement and a Gramm-Leach-Bliley certification for anybody that is a vendor of ours that touches confidential, non-public information. So your copier companies, a typical copier holds 5 million documents. Imagine how many Social Security numbers could be listed within 5 million documents. We have our courier companies who carry confidential information with them. We have our signing services who have confidential information in their cars. We have the janitorial service who can come in at any time at night and go through the documents and steal information that would be confidential, non-public information. Each one of those vendors, plus other vendors who touch confidential information, all have to sign those vendor agreements and have to sign the Gramm-Leach-Bliley certification that they are meeting the Gramm-Leach-Bliley test. For us to use that vendor, they have to sign. There is absolutely, positively no wiggle room here. Either they sign or they're not a vendor of our company, period. That's their choice. If they decline to sign, we cannot use them, and we will not be using them. So those are the parts. This is probably the biggest part of Gramm-Leach-Bliley because of the amount of issues that we have in protecting confidential information through tech. Because where people are getting exposed is that they are getting through into companies and they are, for example, breaking into the companies and then wiring money out of the trust accounts. It is probably the biggest fraud in our industry today is the fact that the criminals have found a way to get into our systems collectively in our industry and wire money out. I hear about it every month. We have the proper firewalls. We have the proper certifications. We have the proper passwords. The passwords that we have to be complex passwords. So you can't use password. You can't go password 1 2 3 4 anymore. You actually have to have something that changes and something that is a strong password with capital letters, small letters, numbers, and symbols. So those are the things that we have done in order to make sure that we are compliant. Plus the fact that our security and our firewalls are tremendous. The other thing that we've done is we've added an encryption policy. And the encryption policy is going to be set forth over the next month or two. And it's going to have pushback. I mean, I'd love to tell you that we're going to put in an encryption policy and all the clients are going to adopt it and love it. That's not going to be the case. However, everybody in our industry is having to do it at the same time, so it's not like they're going to be able to go to another company and do it. Because if they go to the other company and they don't have an encryption policy, the bank is not going to fund to them. If we do not pass this Gramm-Leach-Bliley test, and we will, then no bank will fund to us, and basically companies that don't get funded go out of business. And it's just that simple. Rich Macaluso's statement that this is heir to us, we need it to live, is probably the most accurate comment I've heard when it comes to Gramm-Leach compliance. So, we have developed an encryption policy. We have bought a program called Sophos. Sophos, to me, is the most user-friendly of the encryption policies. and or encryption softwares. And that combined with our encryption policy should allow us to be compliant with CFPB, compliant with Gramm-Leach-Bliley, but also not create such havoc with our clients that they won't want to use this anymore. So far, we have demoed or installed this in 4 different companies. I've got 2 complaints, and both the complaints were, I hate encryption. Well, that's not a complaint. That's just, I'm sorry you have to type in a username and password, but that's just the way it is. And the great thing about Sophos is that it actually reads the document and determines whether or not that's confidential information. So not every email going out is encrypted. Only those that carry private, non-public information, or NPPI. It reads the document, looks for NPPI, and then tells you that it's going to be encrypted, and then you send it or don't send it. It really is the most user-friendly of the systems that we looked at, and I can tell you that many, many systems were looked at, and we really tried hard to find the most user-friendly system out there. Is it perfect? No. There's no perfect encryption program. But it is the best of what is out there right now. I can tell you I've had 2 underwriters call me, and they have their own encryption program, and they have asked us what we're doing because they have gotten an avalanche of complaints and we haven't. And so I've told them about Sophos, and I think a couple of the large underwriters are going to be using them. So kind of interesting. But that is the biggest pillar of the 350 protocols that fall under all of the 7 pillars of best practices. There's just about half of them go to IT. So the IT department has taken the biggest share of this. And it's not just the IT department here in California, but it's been the IT departments in all of the family of companies. They've just done a phenomenal job. When you have an opportunity to speak with one of them, thank them for what they've done. They have gone out of their way to write programs and to make sure that our systems are up and running. And our systems now, the chances of us having a major crash are literally 0 now. It is definitely improving the system. And we've paid a lot of money for that, but it's going to really pay off in the end. The next best practice is adopt written policies ensuring compliance with local and federal and state consumer laws. The problem that we have is that we're in 48 states. Every state has their own rules, regulations, and policies. We've had to research 48 states. We've had to figure out what states have what laws. And what's frustrating is that you have a state, and it doesn't really matter which state you pick, but there's almost every state has some type of privacy law. In many instances, it conflicts with Gramm-Leach-Bliley. So not only do we have to meet the state law, but we have to meet the federal law. So we have gone out and really looked at every single state rule and regulation, and we have put together a series of programs that allow us to meet all of the state laws. It's been a huge project, but it's done, and we're in really good shape. The other thing we need to do is we need to submit documents for recording in 2 days. That doesn't mean every single document has to be recorded in 2 days or you start flunking the Gramm-Leach test. That's not what it means. It means your policy has to be 2 days, and you have to do everything in your power to make sure that you do close in 2 days. We understand there's going to be certain instances where files are going to get set to close and there's going to be a problem with the recording. We get that. But there shouldn't be a steady stream or a steady diet of it. There should just be a rare time that happens. And if it happens, it happens. And we should do what we can to resolve it as quickly as we possibly can. We need to put procedures in place to ensure that customers are charged the established rates. There have been bait and switching of rates around the country. We have never, ever, since 1974, been accused of a rate violation. We're not going to be accused of a rate violation now. But there are companies out there that have been accused of rate violations, and when you have some bad apples that are out there, you also have bad regulations that come along with it. So we have put in place procedures that we're going to make sure to charge established rates. Some of that's easy. For example, Texas, Florida, New Mexico, Those states with promulgated rates that are set by the government, it's easy. That's what the rate is. Those states which are file and use, California, Nevada, Arizona, those states are fairly easy because you set your rates, or your underwriter sets your rates, and you follow them. And then you have states like New York, where you can pretty much do anything you want, and you have to make sure not to overcharge. So we have to make sure that we don't overcharge in New York, although they're starting to put in some regulations as well. Then we need to do a post-closing quality check. We need to do a post-closing review to make sure that we do what we say we're going to do, and we did it. And we have been doing this for years. This is not a change in policy, but we're probably going to increase the frequency of the examinations. The next pillar is we have to adopt written procedures relating to document or policy production, delivery, reporting, and premium remittance. We have to deliver policies within 30 days of the closing to the consumer. We have been longer than that at times. Right now, every one of our family of companies is well within 30 days. And we also have to remit our premiums to the underwriter in 1 month following the date of the closing. So if we close a deal on the 1st of the month, we'll get billed on the 1st of next month, and we have 30 days to pay. Not a problem. We've always paid our underwriting bills, and that's not it. But we wanted the government wanted to make sure that the consumer who paid the bill and they paid the underwriter. You never want to have an issue where lack of payment could invalidate a policy. So that was their thought process, and we are way on top of that, and that's really not much of a problem. The next best practice is to maintain appropriate professional liability insurance and fidelity coverage. This means we need to make sure that our E&O policy, our professional liability, in those areas where we have professional liability insurance, our surety bonds are kept up, our theft bonds have been kept up, and we want to make sure that we are completely insured. Not only are we ahead of the game here, but we are well in excess of the minimum insurance requirements. Well in excess. There's not going to be a lender that is going to have a problem with the amount of insurance that we have, at least today. That may change in the future, but at least today we're well in excess of what our policies need to be for a company our size. We have stepped up on that and spent the money and done what we needed to do to increase the amount of E&O insurance and D&O insurance and fidelity insurance and every other type of insurance that you could possibly find. Every company has access to a program called EasyDocs. There will be people within each company who will be able to access the EasyDocs. So if some lender requires a copy of our E&O policy, you can provide it to them. If they want a copy of our fidelity bond, you can provide it to them. If they want a copy of our disaster recovery program, you can provide it to them. If they want a copy of a license, you can provide it to them. Every single document that they could ever want is going to be located within EasyDocs. And it's a very simple, well-written program that will allow you to get whatever you need in order to satisfy a lender request. And so this particular pillar, not only have we met, but we have significantly exceeded. The final pillar that we have is we need to adopt and maintain written procedures for resolving customer complaints. This comes straight out of Dodd-Frank in that the banks have to maintain a log, and they must maintain a log of all of the complaints at any given time and how they are resolved, and if a complaint is not resolved, how it is escalated. So how it moves through the company, and then what the final resolution is. The question is what constitutes a complaint? That really seems like an easy question, and I can tell you it's not. A complaint is, I don't have a copy of my policy, can you send it to me? That's not a complaint. A complaint is a written complaint that is either directly sent to us or is sent through a Department of Insurance that we need to respond to. And so what happens is when we get a complaint in, and they're not often, I got to tell you, I do not get very many complaints anymore, which says boatloads about, just speaks volumes of the great job that we do as a company. And we now have a standardized policy for complaints. Each company will have 1 or 2 or 3, whatever the PCM wants to have. They will have a way to install the information and put the information into the complaint program. First of all, they'll determine what's a complaint. Then they'll put the complaint in, who's the complainant, and then what's the resolution. If it doesn't get resolved, it gets kicked up to the next party. If it doesn't get resolved, it gets kicked up to the next party. Theoretically, it could go through several different parties, and finally, it goes to the office of the president, and that's what our policy is. That's not what CFPB is requiring. But that is the Orange Coast policy, whereby we do not want to have any unhappy customers. If someone has taken the time to make a complaint, they are an unhappy customer. And we will go to the ends of the earth to make sure that all customers leave us happy and have good things to say about us. We will have a single point of contact, we will maintain a log, and then every once in a while we will show that log to an auditor. And they will verify that we have, A, done everything, and B, we have resolved the complaints. Now, the answer may be the complaint's unresolvable. There may be instances where we did everything perfectly correctly, and at the end of the day, there's just no way we can make somebody happy. But we have to make sure that that happens very, very, very rarely. Instead, we're going to do whatever we can to make sure there are no unhappy customers. But that's the goal, and that's what we try to do. So those are the 7 pillars to the best practices. After best practices were written, there was a lot of issues on how this was going to be installed. And so we sent best practices out as the ALTA board to a committee, and they put together a series of 358 protocols that meet all of the best practices and explain it in what can only be described as excruciating detail. After we drafted best practices, we needed to make some changes. So what we ended up doing is we drafted a best practices 2.0. 2.0 made some changes that CFPB and the banking community wanted. We've made those changes. There will be a best practices 3.0. There'll be a best practices 4.0, 5.0, 6.0. However long we need to keep changing this document. This is a living, breathing document. So there may be changes, and there will be changes into the future. We will be audited every year. In December of every year, we will have Squire Milner or an accounting firm come out to our office and test us on this. Not only are we going to have that, but we're going to have an outside assessment company come and test our IT. Essentially, for want of a better term, we're going to invite them to hack us. And then they're going to do a risk assessment. So this is something that we're going to be living with on a daily basis, not just a weekly or yearly basis. This is something that's a real game changer for the entire industry. We have put together this policy in the executive committee, and the executive committee at Orange Coast and the family of companies has really embraced best practices and really embraced what ALTA has done. And we are on the cutting edge of what is going on out there in the real world. Within a week from the taping of this, and by the time you see it, it will probably already be done, is we will have a letter for you. And what that letter will do is, if you get requested to say that whether we meet any of these best practices or we meet all these various best practices, that we have a letter that says, yes, every company within the Orange Coast Orange Coast Title family of companies has met the best practices. We will have an extensive, comprehensive, very long letter that we will send to lenders and get lender approvals from. We will be one of the very first companies out of the gate with that SOX 16 level 1 and 2 audit. We have been probably as proactive as any company in the country to make sure that we do not lose deals on this. The other part of this is training. You are going to have a significantly increased amount of training. You're going to have title classes for the title officers. You're going to have escrow classes. And then each time that you sign each time that you do a class, you'll sign a certificate, and that certificate will be placed in EasyDocs to show that we are indeed doing additional training. You will see the training go up exponentially. In addition, you will be trained on best practices. If you're an escrow officer, you will be trained on clean desk policy. You'll be trained on what documents you can have and what documents you can't have within your file. So you'll be trained on pillars 2, 4, and 6, or 2, 4, and 5. If you are, and 6 actually, because you're going to want to have, you're going to need to know what insurance coverages we have. If you're the person that is doing the complaint logging, you will be trained on that complaint logging system. Within the executive committee and within the corporate administration group, there are training groups for each of the pillars. We will determine who needs to be trained in each pillar, and we'll make sure you get trained. That will be happening in the first couple weeks of January. And then we will have general classes. I know that we have general title classes, and we have general escrow classes, but we're going to be much more formal than we were before. And your participation is not going to be if you're able to make it. You will have to make it, because we will have to show that we have a comprehensive training. The other part of it is, again, we are going to be doing yearly background checks. That includes credit checks. So we are going to be looking at everybody every year in order to get this passed. With that, I don't really have anything else. I wanted to make sure that you understood exactly what we're doing. This is just an overview. Believe me, you're going to be getting into a lot more depth in each of the pillars and each of the training sessions. But this was supposed to be just an overview and to let you know why we're doing what we're doing and how important it is. If we don't do this correctly, then we basically go out of business. And that means for every single company out there. So with that, I thank you for taking your time today to spend watching this video. I hope that you got something out of it, and I hope that you do put in for your time in training, because this is something that you need to sign off on that you've participated in. So with that, I thank you very much, and you can always feel free to call me with questions. Anyone in the company can always feel free to call me with questions. There's nothing more important on my plate than making sure that we're compliant and best practices compliant. Thank you again for watching this, and have a great day.